Good morning, Timber Centers. This is Michael, Trading Escapes. You can find us at tradingescapes.com. It is Thursday, December 20th, 2018. We are looking at another day of the December of Disciplined. To trade our plan, strategy, idea, work our executions and management, and hopefully be in the 10% again with all of you. Just looking at the beta name stock that we're going to trade today, AMD. We've been trading this through the course of December. And looking at the daily chart here, just looking at the lack of support that we have to the downside. Kind of took a huge turn down again yesterday with the Fed news. We have some support here at $17, again at $50 or about $16. So we're just going to see what happens today. Regardless of what we're looking at on the technicals here, I mean, we always have to be aware of them. We want to know what opportunities are to stay sharp. But we're trading the strategy, which doesn't really depend on these daily levels so much. So, we'll come up with other strategies in the future to incorporate these daily levels. So I'm going to put you on pause. We have about 15 minutes until the bell. And I'm going to refill my coffee cup and get ready. All right, 10%ers, we're coming into the morning. Got about 30 seconds left. Just waiting for something to happen here. Marked off a couple levels on the daily chart for AMD. I don't think we'll be getting down to any of these levels today, but you never know. The first one to hit is around 17, just north of 17, so about 17 and a quarter. And there's the bell. As always, with this particular strategy, what we're doing is we're just marking off levels. A huge pull up here. $60 is the entry for the runner. We have an entry set. Taking off. I don't like having things just sit out there too long. So we're looking to take an entry here because of the pressure to the upside. And it's running 50 cents. And basically we're given a run in a 50-cent run within 2 candles. So we're in candle number 1 and we're so close to our trigger point that we're looking for this to run on the second candle. I don't like it really popped there at first. Now it's just sort of flatlined. If we can't get 50 cents in the first 2 candles, alright, so we're in. And having a pullback. Pulls back to that trigger level. Pulling back a little too far for my comfort, but I have to let it play out. The management on this is to let the stops work. Back up, making a break. High is at 75 right now, 1875. $76. $77, so highs at 78 right now. We hit 80. 80 is our level where we can pull this back to break even now, if we feel that it's not going to sustain the move. High of 86. Pull back. See if our decision to give it a little breathing room pays off. It's a big red candle that we put in there. And I got my stop hovering around the 9 right now. Trying to exercise a little bit of patience, a little bit of discipline. All right, we jumped out. There's just a lot of consolidation going on here. We'll see if we can get a pullback to the 20 and re-enter at the 9. We followed our rules because we did have a pull 20 cents off our trigger. So that allows us to move our stop to break even. And we did a little bit better in break even, so we're just gonna let's see if this pulls back to the 20 now. And if it does, we can look to take another entry to the upside over 65. Now, what we saw this morning was we might have seen a bunch of kind of a short squeeze with this thing ramping down and people getting out of the shorts. Just a small move. All right, so we're pulling back to the 20. Kind of just hit our trigger to the downside. Still waiting to see if it, this is just a huge breathing pullback. I mean, obviously it looks like it's going to reverse, but just keeping an eye on it. Yeah, it's showing support at the 20. It's hit it a couple times. All right, so we took an entry to the downside as it breaks the 20 level. It was showing support at the 20. It cracked the 20. So again, this is our second trade for the day. Be a little more aggressive on the stops. All right, we're coming to a close in this candle. We're going to see what happens. If it relaxes, it just keeps pulling down. Okay, candle closed, new candle open. Candles come to put in a green candle so far here. See if we can't get moving back. A little momentum to the downside. See if the bears can take control. I'm going to put in another green candle. Just turned. Hit a pop down. 18. 13. Tens are low for the morning. It looks like it's going to come up and try to stop us out here. Oh, another pop down. Yeah, and there it is. And if you're still in, or if you're still holding, or if you're trading this, I wouldn't feel too bad. Let your stops work and see if you can't take a little more profit out of it. We have this doji here, so we definitely have some indecision going on. We're up 147. $147.50 for the morning. Just trying to figure out what to do. You know, this is one of those things where you have a feeling. It's like, oh, you know it's going to go down. And honestly, you shouldn't be trading those feelings. Yeah, it might be right one time, and it might be wrong 3 times in the future. So, you know, you just sit tight. You know, the only levels we have right now are, you know, the 9 and the 20. So we're bouncing around the 9 level. It seems to be some resistance to the upside. But the question is, you know, where would we get in? I'd love to see it pull back into this zone right here, and we'll get back in as it drops. Well, I don't know if we'll get back in, but at least we'll walk through it as a trade. There it goes, taking a pop up. Coming up. Nope. All right, back in at 25. Again, this is our 3rd trade, so stop's a little more aggressive. So we had a little bit of an order mix up there. We ended up taking true trades, but it's okay. Sometimes TD Ameritrade or Thinkorswim really sort of, you know, this active trader is great, but if you run past your stop and you drop your stop, then it barks at you. And while it's barking at you, if you try to mark it in or out, then you're it barks at you again. So basically we had 2 market orders, and it executed both of them, so then we had to get out. So the first one closed our positions to the short side. The second one added 1,000s to the upside. All right, so that is going to do it for today. I'm going to put it on pause and we'll watch the last action for a little bit longer and come back and wrap it up. So we're seeing a lot of consolidation as we come into the close of the first 30 minutes. I predict, obviously we're going to have a move one way or the other. This consolidation has to move into expansion, right? But I feel like we've overtraded this morning already. And again, this is all relative to the plan that you're trading, but two trades should have been where we stopped for sure. And we really only took 3 trades. The 4th trade was a misstep on execution as far as clicking execution, right? So here we are. We're up $79.84. When we do a review for the month, we'll get into some interesting scenarios where we see how this would have played out as far as full size executing these trades. We're up $79. That, let's see, $79. That's more, well, the price fluctuation here. It's about $800 full size. And I'm going to make a video, not that I'm going to make a video where we're looking at the CFD TradeNet situation, where an individual could have potentially, so I'll make a video basically saying, if I open a TradeNet account in November, I set this plan up, and I traded it full size with my TradeNet account, right? Where would we have ended up for over the course of December? And especially given the fact that the first 2 weeks of December, I really don't feel like we're all that special. The first week so far, we made $337 in the first week. In retrospect, on the analysis, if we would have followed our trading strategy, that really should have been a $1,200 week. The second week, we were down $315. Just a horrible trading week, and not from anything that was going on in the markets or on the chart. It was we weren't following our plan. We were just off. Anyway, we've recapped that. That second week, following the plan with some consistency, should have been an $800 week. And so far this week, we haven't had a misstep. We took full profit on Monday. Tuesday should have been a loser, but we made $60 with the second trade. Wednesday should have been a loser, but we made $51 with a second trade. Thursday, today, should have been flat. And the reason I say that is this first trade, right? This first trade gave us an opportunity to stop out at break even. And that opportunity comes when we run 20 cents in the direction we're looking for. Then we can move our stop from a 10-cent stop to break even. So this week should be flat, or not flat. It should be a $300 winner, loser, flat, right? So we should be up $100 this week because we had a $300 winner, $100 loser, $100 loser, and we're flat today. So we should be sitting at $100. Now, that equates to a $1,200 week if we were using using that TradeNet account. But keep in mind that if we're looking at that, let's say we had $1,200 the first week, $800 the second week, and $100 this week, right? That would be, and this is where the math just starts to, it doesn't even sound real. That would have been, we would have made $25,000 so far. $1,200 week, $800 week, $100 week, that equates to $1,200. So yeah, it's I think even if you followed the trades where the first 2 weeks where we've had some missteps, if you follow these trades exactly as we've traded them, if you'd opened a TradeNet account, you would be green close to $6,000 or $7,000 at this point in time. So there it is. It's And the reason I'm talking about TradeNet, the only reason I'm talking about TradeNet, obviously we have a trading account with TD Ameritrade. We're using it right now. It's funded. It's got over $25,000, so we can trade, day trade in it. I'm sorry, I'm not getting sick. The TrendNet scenario is just for anybody else out there who's looking, maybe getting started, or just another opportunity to get into the market. The TrendNet account is whatever, it's $8,100. You get $240,000 worth of buying power. So there are some other fees, but given all of that, given the sloppy trades that we had week 1 and 2, you would still be green. Even given the fees, you would be green plus $5,000 right now. And if I traded the plan exactly as I should have, we would be up over $20,000 for these 3 weeks. So it just puts this stuff in perspective. And I'm going to remake all of this, from scratch at the end of December, given this scenario. So we'll have a scenario where we say, if we would open up a TradeNet account and traded, took all the trades that we traded at full size in that TradeNet account, what would we have had? And then we'll go back and just play around with it and say, and if we'd have done a little bit better, if we would have followed our rules better, what would we had? So it'd be interesting. Anyway, December, it's the December of discipline. We're trying to prove to ourselves. This is month 6. We're trying to prove ourselves consistency, and we're getting there. The trades are feeling better. We've had more trades and held more trades for a 30-cent profit than we have in the past 5 months. So, I'm feeling better about that. We've really focused in the past 5 months on these scalps. Whereas I believe there's money to be made scalping stocks, absolutely. It gets you, for a beginner, it can get you into a bad mindset, because scalping stocks, to me, it really triggers a lot of negative emotions when you're trading, such as revenge trading. Because if you're trading this plan like we are right here, you take a negative trade, what you're going to lose, what you're going to win, you know that the day can end up red, and that's just fine. For the math to work, you have to have a red day. When you're scalping, you're so focused on what's right in front of you, and you always feel like there's another scalp to you get down $500. Well, that's no problem. There's candles in front of you. I'll just scalp the next pullback. And it's revenge trading. You're not trading a plan, and you're just, eventually you just end up you end up having some winners here and there, and then you just end up digging yourself a hole. What we're doing here, so we're going to come into the trade day tomorrow, and the scenario is the day's either going to be green or it's going to be red. And if it is red, we already know what we're going to lose. We're going to lose $100. It's going to be red $100, right? And it could possibly be green 300. It could be red 100, or maybe we have a spot somewhere in the middle there. But we know our extremes. We know what our profit is. We know what our loss, our loss or stop is going to be. So anyway, I hope you guys are in the 10%. The market's a little crazy right now. Obviously, this is the first time we've ever traded in a market such as this. I guess it's a good opportunity. You hear a lot of people saying it's a good opportunity for day traders, and we'll see what happens. Part of me feels like, here we go. We got into this too late. Now the market's had the biggest run up in history, and now, in December, we've had some of the biggest losses ever since the Great Depression. Hey, hopefully it is an opportunity. So far this week we're fine. So we'll see what we can do. All right, guys, have a great day. I'll talk to you soon. Hope everybody's doing well, and we'll see you tomorrow.